Hi, everyone. Thank you for joining me today. I'm thrilled to present a comprehensive deep dive into Metaplanet's Project Nova, straight from their Q1 2026 earnings presentation. Just before we start, just a reminder that this is not financial advice, and please do your own research. If you're enjoying the content on my channel, I would appreciate it if you could like and subscribe, as it really motivates me to make more content. Metaplanet is no longer just a Bitcoin treasury company. With Project Nova, they are actively building Japan's institutional Bitcoin platform, a full stack financial services ecosystem that will generate multiple revenue streams while relentlessly increasing BTC per share for shareholders. This is one of the most ambitious strategic pivots we've seen from any Bitcoin treasury company to date. What is Project Nova? Let's start with the big picture. Project Nova is Metaplanet's initiative to construct a complete Bitcoin financial services platform on top of their massive Bitcoin holdings, proven operational expertise, and Japan's fast evolving regulatory environment. Instead of simply holding Bitcoin and waiting for price appreciation, they are creating an active business with recurring revenues that all circle back to buying even more Bitcoin. The three announced pillars are clearly laid out in their slide deck. Metaplanet Asset Management, offering Bitcoin related securities and fund products. Metaplanet Ventures, strategic investments in companies that accelerate Bitcoin adoption. And the foundation layer, custody and core infrastructure, which is currently under active development. This transforms Metaplanet from a passive holder into a true infrastructure provider with durable, fee generating businesses. The 2028 regulatory catalyst. To understand why this matters so urgently, we have to look at the macro backdrop. Japan is on track to formally recognize Bitcoin as a regulated financial asset by 2028. This is Japan's equivalent of the US spot Bitcoin ETF approval in January 2024, but on a much broader scale. Once that milestone hits, pension funds, insurance companies, asset managers, and trust banks will be permitted, and in many cases required, to use licensed, regulated infrastructure for any Bitcoin exposure. Metaplanet's own slide deck explicitly states they are targeting readiness ahead of Japan's 2028 regulatory milestone. This is not a reactive plan, it's a proactive land grab for institutional market share before the floodgates open. The first companies that are fully licensed and operational by 2028 will capture the lion's share of what could become a multi-trillion yen institutional Bitcoin market. Asset management overview. Now let's break down the first major pillar, Metaplanet Asset Management. This will be the fund and securities arm, offering three distinct categories of products specifically designed for Japanese institutional investors. Bitcoin income products, Bitcoin securities and wrappers, and managed strategies. Each one leverages Metaplanet's existing options expertise and Bitcoin Treasury playbook. Bitcoin income products. First up are Bitcoin income products, structured yield instruments that use sophisticated option strategies on Bitcoin to generate attractive returns. Metaplanet has already demonstrated real world expertise here through their own treasury management, turning Bitcoin's volatility into additional BTC yield rather than just holding passively. Specific examples include covered call funds that hold Bitcoin and systematically sell calls, structured notes with fixed coupons linked to Bitcoin performance, short duration Bitcoin yield certificates, volatility harvesting vehicles, and even principal protected notes in JPY terms. Why is this powerful? Japanese institutions have been starved for yield for decades due to near zero interest rates. A regulated product offering 5 to 10% annual yield in JPY or BTC terms could see massive demand. My conservative to bull revenue estimate for this segment alone, 500 million yen to 2 billion yen per year within 3 years of launch, based on 50 to 150 billion yen in AUM, a 1% management fee plus 15% performance fee above a 5% hurdle. Bitcoin securities and wrappers. Second category, Bitcoin securities and wrappers. These are JPY denominated financial instruments that give institutions compliant Bitcoin exposure without direct custody or balance sheet issues. Think JPY Bitcoin ETFs, Bitcoin certificates of deposit, closed end investment trusts, segregated portfolio wrappers, Bitcoin collateralized structured products, and even ESG aligned wrappers that document energy mix for constrained mandates. The key phrase in the deck is for institutional mandates. They're targeting pension funds, life insurers, and bank trust departments with hundreds of trillions of yen in total assets under management. Even a tiny 0.1% allocation across Japan's institutional universe would be enormous. Revenue modeling, 1 billion yen to 5 billion yen annually within 5 years, assuming 200 to 800 billion yen in AUM at a blended 0.5% management and issuance fee structure. This segment has the highest upside potential of the entire platform. Managed strategies. Third, managed strategies. These include discretionary macro funds, systematic momentum and risk parity strategies, institutional Bitcoin DCA programs, and, most importantly, Bitcoin Treasury management as a service. Metaplanet has already perfected this exact playbook for themselves, raising capital, acquiring Bitcoin, running options overlays, and reporting in both BTC and JPY terms. Now they can sell that expertise to other Japanese corporations as a high margin service. Fee structure is classic alternatives, 1.5 to 2% management plus 20% carry above an 8% hurdle, combined with retainer based TMAS fees of 50 to 100 million yen per corporate client. I estimate 300 million yen to 1.5 billion yen annually once scaled. Metaplanet Ventures. Moving to the second pillar, Metaplanet Ventures. This is the investment arm focused on companies and technologies that grow Bitcoin adoption in Japan and globally. Digital asset infrastructure, Bitcoin collateral management, stablecoins and payments, and Bitcoin software hardware. A flagship investment already announced is JPYC, a regulated yen stablecoin issuer that will directly power faster settlement and new product design across the entire platform. The dual mandate here is financial returns plus strategic optionality, exactly like the best corporate venture arms. Monetization comes through equity appreciation at exits, revenue sharing from portfolio companies using Metaplanet services, and strategic platform fees. The flywheel is powerful. Portfolio growth drives demand for custody and asset management, which buys more Bitcoin. Estimated contribution 200 million yen to 1 billion yen annually within 5 years. Foundation layer, custody and core infrastructure. None of this works without the foundation layer, custody and core infrastructure, which is currently being built and sits at the base of the entire roadmap. This is the deepest, strongest part of the skyscraper. It includes institutional grade cold storage with multi signature controls, regular proof of reserves audits, Lloyd's level insurance, prime brokerage and OTC connections, real time risk management dashboards, full FSA compliant AML, KYC, and reporting systems, secure client portals, and enterprise grade APIs. Every other business in Project Nova depends on this layer. Asset management needs custody for client Bitcoin, securities wrappers need settlement infrastructure, and ventures portfolio companies need a credible platform. Metaplanet is investing now to own the highest barrier to entry, regulated compliance ahead of 2028. Revenue potential summary. Bringing it all together, here are my analytical revenue projections for Project Nova. Not official guidance, but grounded in market sizing and comparable fee structures. Bitcoin income products 500 million yen to 2 billion yen Bitcoin securities and wrappers, 1 billion yen to 5 billion yen. Managed strategies 300 million yen to 1.5 billion yen Metaplanet Ventures, 200 million yen to 1 billion yen total conservative case, approximately 2 billion yen per year. Bull case, approximately 9.5 billion yen per year. In USD, that's roughly $14 million to $66 million annually. These revenues can be reinvested straight into Bitcoin purchases, creating powerful compounding for BTC per share. Valuation framework shift. Project Nova completely changes how analysts and investors should value Metaplanet. A pure play treasury company trades primarily on its Bitcoin NAV multiple, but a diversified platform company with recurring fee income deserves a higher, more resilient multiple. Fee revenues are far less volatile than Bitcoin price itself. Even in a bear market, management fees, custody services, and venture distributions keep flowing. This creates two solid valuation floors: the Bitcoin NAV floor and the discounted cash flow value of the earnings businesses. The network effects and moat will only strengthen over time. BTC per share engine. Most importantly for shareholders, does this increase BTC per share? Absolutely. Project Nova adds entirely new pathways beyond equity issuance or debt. Asset management and custody fees, converted directly into Bitcoin purchases. Venture gains and revenue sharing, more Bitcoin accumulation. Treasury management as a service, retainers. Steady operating income, layered on top of the capital market strategy. This is an earned income engine that makes the Bitcoin accumulation flywheel even stronger and more sustainable. Key risks. To be balanced, Project Nova carries real execution risks. Regulatory timelines could slip, building regulated custody and asset management from scratch is capital intensive and operationally complex. Competition from giants like Nomura, SBI, and Monex is real, and a prolonged Bitcoin bear market could slow institutional fundraising. These risks are important to acknowledge, but Metaplanet's first mover positioning and proven treasury track record give them a meaningful advantage. Final thoughts and conclusion. In closing, Project Nova is the most important strategic initiative Metaplanet has announced since adopting the Bitcoin standard in 2024. It evolves the company from a Bitcoin treasury holder into Japan's dominant institutional Bitcoin financial institution by 2028. The three pillars are designed to reinforce each other perfectly. The foundation makes everything possible. Asset management monetizes existing expertise. Ventures creates strategic optionality and a powerful flywheel. For shareholders, this means higher BTC per share, recurring revenue diversification, and a far more valuable long term business. If Metaplanet executes, they won't just be Japan's largest Bitcoin holder, they will own the infrastructure layer that defines how Japan interacts with Bitcoin for decades. Thank you very much for your support. I hope you found this information helpful.